All right, Tim, we had another volatile week. We had a mix of decent economic data with the backdrop of recession and trade war. What happened?
It was just a wild roller coaster ride this week, and the down 800 points on Wednesday pretty much was sparked by the yield curve briefly going inverted from the 2-year to 10-year time frame, and that just set off a whole collection of conversations about what would it mean if we went into a recession? How much of a predictor is this of a recession? It really kind of got overplayed and overhyped a little bit too much, frankly, because unless the yield curve stays inverted for at least 3 to 6 months, it really doesn't have any predictive value. And by Thursday, in fact, the 2 years yielding 150, the 10 years yielding 154, so it wasn't inverted the following day. Markets didn't really rally much on Thursday. In response to that, still tremendous uncertainty over how the trade issues with China are going to be resolved and how that's going to trickle in to the U.S. economy.
Well, we also saw the 30-year reach a historic low. People are suggesting that foreign investors are trickling into our bond market. Would you suggest that there is a bubble in the bond market?
Well, there is certainly tremendous amount of buying in the bond market. I don't know if I'd call it panic buying, but it looks to me like the early stages of a bond market bubble. Now, some of this is precipitated by the fact that Germany had another round of negative economic data also. Their second quarter GDP did decline by 0.1%. So people are selling probably bonds in Germany and maybe other parts of Europe that have negative yield. They might be buying US bonds that still have a positive yield. But I just don't buy into the recession fears that some people are talking about. We had very good economic data this week. We even had some inflation in the CPI numbers on Tuesday. We had very strong retail sales on Thursday. We had a very strong productivity report, a full point above consensus, which we mentioned briefly last week. So the consumer is 70% of the U.S. economy. The weakness is in the manufacturing sector, which is 12% of the U.S. economy. I just don't think that a recession is in the cards. And I think that, yes, the bond market, the buying in the bond market right now is a little bit bubble-esque, I would say.
All right, so are we going to have another crazy week? What will you be watching? We have FOMC minutes.
You know, next week I think we'll have a little bit less volatility than we did this last week and the week before. We're coming into the second half of August. There will be a lot of people out. It's a very high, typically vacation week in Wall Street. Now, clearly, if there is news, headlines, the market will definitely react to it. But I think that the Fed meetings will get a tremendous amount of attention, given what's going on in the bond market, giving speculation as to what they might do in September. Right now, it's like 2/3 25 basis point cut. 1/3 is a 50 basis point cut. I think people are really going to dig into those Fed meetings to see what the economy really looks like in detail. And the other thing that I just have to mention, because it was such a big deal on Thursday, was that we got to get some clarity from GE on this report put out by one of the individuals, Harry Michaelopoulos, who was one of the people who was first to pinpoint Bernie Madoff as being involved in fraudulent activities. He's making similar comments about General Electric. The stock is down 10 to 12% on Thursday midday, and they need to come out and provide some clarity on this. It's not the stock that it was. It's no longer in the Dow Jones Industrial Average. It's still a major industrial company worldwide, and I think the market is bothered by that a little bit.